Hey everybody, it's me, Gregory Mannarino. How are you today? It's Thursday, December 14th, 2017. Before you even get started, a big shout out to Patrick McDowell, who actually sent me $100 today so I can donate it to the animal shelter, which I support every single month with a donation. These homeless and abused animals need our help, and I really cannot thank you enough for that. And so many of you have become supporters of this cause, have written to me now since I've been kind of promoting this for a while, and I want to thank every single one of you as well. It's just so important to pay it forward, and that's how you can do it. All right, let's talk, people. So yesterday we heard from the Fed. One of the things that Janet Yellen spoke about was the yield curve, and you have to pay attention to this, and I'm going to talk about that right now. What we are watching and what we have been seeing now for months and months is the yield curve continue to get flatter. Now, yesterday, the Federal Reserve raised the federal funds rate, which affects the short end of the curve. So what happens here, okay, is by raising that, it nudges the curve. You see how it kind of gets a little more flatter? Not only is that happening, or did that happen, you got a massive, yesterday was off the charts. The bond buying yesterday was so overwhelming that despite the fact that the Fed said they're going to raise rates and they're going to continue to unwind their balance sheet, rates actually dropped. They didn't go higher, they dropped. So what happened is the entire yield curve got flatter. Now, Janet Yellen tried to spin it like this yesterday. Please pay attention to this. She talked about how historically a flattening and then inverted yield curve, she admitted this, generally is a tell that we're going to march into a recession or a slowing economy. But then she followed up and says, well, this time it doesn't necessarily mean that. I mean, are you kidding me? She's trying to tell you out of one side of her mouth that the yield curve is a warning that something bad is coming, but then out of the other side of her mouth, she's saying, no, it doesn't really matter this time, even though every time prior it has led to an economic slowdown and a meltdown of the markets. This is a fact. Look at the top of every single stock market bubble that we have had. Let's just go back to the dotcom bubble. We're seeing the same exact reaction with the yield curve flattening out. So Janet Yellen can say whatever the hell she wants to say. She's deluded just like Ben Bernanke was before her. You remember that whole thing? It's insane. This guy was asked specifically if the problem with the subprime market was going to bleed off. No, it's contained. That's what he said. Meanwhile, it swept the entire world and melted us down, and we had to bail out everybody. And today, even today, when Ben Bernanke walks into like a conference or whatever, he gets a standing ovation. Are you kidding me? The man should be hung, in my opinion. But that's, how do you feel about that? I can only imagine, seriously. But look, what I want you to pay attention to today is this. Okay, epic, literally off the chart bond buying yesterday, which actually forced the yields lower. And you saw what happened to the stock market. Well, today stocks are higher, but the bond market is selling off. It's selling off, people. Now, you know how I feel about it. I believe this will not continue. They have got to stabilize this bond market. Now, if you want to watch them do this, because they're going to rig it, they're going to rig it. They will not allow it to sell off. They have got to manage the bond market, even if it means pushing that yield curve flatter and inverting it, leading us to a meltdown. For now, they have no choice but to manage that bond market. So right on my website, traderschoice.net, right side of the page under the chat room, you will see right now, if you go there, the big, sweep up with regard to the buying from yesterday, and then you're going to see a big red line. They're not going to allow this to happen. At one point, it will become uncontrollable. That's the truth. But now, they're still going to rig this. They're going to prop it up, especially through the end of the year. Think about why. A lot of these CEOs of these major corporations and these banks, they get their bonus paid out at the end of the year depending on what their stocks do. So they're going to push the stock market higher. It's a game, people. Wall Street games everything, and they're going to game this too. Gold and silver right now are under a little bit of pressure after yesterday's nice turnaround. They won't allow that to go up either until some major thing happens. I don't know what that's going to be. Again, it's going to start unfolding in the bond market at one particular time. We're going to have to keep our eye on that. Okay, so I hope I covered all of this for you. Again, thank you, Patrick, for that donation, which I'm going to make to the Animal Foundation. And there's a link in the description of this video for any one of you who maybe want to donate anything, $5, $2, $3, something. It's so important to pay it forward, and these homeless and abused animals need our help. There are many causes out here, many charities. I choose to support this one. You can't fight every battle. You pick one and you try to beat it. That's what I have done. All right, with that said, I will see all of you at the end of the day. We're going to put this all together. Me personally, I'm going to be watching that bond market, that same chart you are, all day, and I'm going to laugh when I see it start to turn around, because what that's going to do is push stocks higher. Watch the correlation. You're going to see the bonds get bid up and stocks follow. It's always the same story. It's incredible. All right. See you later. Over and out.